While we're waiting for people to join, I'll just make you all aware that we will be recording today's session and we will be sending out via email a copy of the replay for everyone who's attending this meeting, but then for the others who haven't been able to attend at this time. Okay, well, we're sort of right on 12, just after here in the Eastern Seaboard. Thanks for everyone for joining us. I'm Mel Monaco. I look after public affairs and marketing for RIC, Regional Investment Corporation. We're hosting today the AgriStarter Loan information session. And before we get started, I'd just like to do an acknowledgement of country. In the spirit of reconciliation, RIC actually acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to elders past, present and emerging, and extend that respect to all Aboriginal and Torres Strait Islander peoples today. So we're coming to you today from the RIC head office. We're actually based in Wiradjuri country in the central west of New South Wales. And I know that we have people joining us from all over Australia today. So wherever you are coming to us from, thank you for joining us and welcome. So I might just run through a brief agenda for what we're going to do today. So we're going to do a little bit of a background on RIC, who we are and what we do as an Australian government agency and delivery agency for concessional lending for farm businesses. We're going to talk about the AgriStarter Loan and I'll introduce you to one of our key agri lending specialists very soon, Mitch Adderman. We're going to hear from our customer. Lachlan Patterson is joining us today as well for our webinar here in our head office, and he's going to share his story about how he went about his succession planning journey with the help of an AgriStarter Loan. We'll also help you with some additional resources and we'll have a Q&A session as well. So you might see in your top toolbar on Teams, there's a little Q&A icon. That's where we ask you to add any of your questions that you may have throughout the session. For those who registered and added questions, we will try and cover those questions throughout the session as we go. We'll also have a feedback poll at the end of the session. This is very valuable for us so that we can actually evaluate the information that we're providing you and get your feedback so that we can actually improve these sessions into the future. And just a reminder that we're today as well so that we can share this with others who might be interested in this program. So today's presenters, I'm Mel Monaco, as I said. I'll just be hosting and helping to MC today. We've got Mitch Adderman. He's one of our agri lending managers here at RIC and very experienced in lending. And also Lachlan Patterson. So thank you, Lachlan, for joining us and volunteering to share your story with us today to help others. It's very much appreciated. Okay, so about us, you might be aware that RIC is an Australian government provider of low interest loans. We're actually committed to strengthening Australian agriculture and building thriving regional communities. Our loans help to prepare for and manage through and recover from business disruptions. So that might be a drought, a natural disaster such as flood, or it could even be a biosecurity risk. We also help first generation and next generation farmers to start a farm business or with their succession planning journey. So that's probably most of you today, or you might actually be a supporter or a key person who helps with planning for farm businesses. So RIC was actually established in July 2018. We've been around for about 5 years and we are a national consistent program open to most eligible farmers right across Australia. As I said, our office is in Orange, New South Wales, Wiradjuri country, and our team are mostly located regionally. Most of us actually own a farm or even have a connection to a farm. So we do understand a lot of the challenges and issues that farmers are actually facing. So our loan programs, we have a number of loans suited to different purposes and there's different eligibility for each loan as well. Here's just a little snapshot and we'll go into a lot more detail around the AgriStarter loan. But we also have a farm investment loan, which is helping to recover from severe business impact and prepare for future financial disruptions. We have a drought loan. We have a big portfolio with drought. We was established at a time where there was most of the country in drought and was a very prolonged and severe drought. So we have many customers on our drought loan, and the same with AgBiz drought. This is a little bit different. It's more for farm-related small businesses, not directly for farmers, but those who support farmers and supply into that supply chain. In terms of our impact and the value that RIC loans actually bring to Australian agriculture, we've actually settled over $3 billion in loans. That's a lot of money that we've got out directly to farmers to help them with their business. We've actually settled over 3,000 loans, and that's to farmers to help them to prepare, recover, grow their business. And we've actually done some work with some independent modelling to understand how much interest we've saved over the last 5 years to the farmers who have our loans, and it equates to about 268 million. So that's money that directly can be put back into farming and help regional communities as well. For this financial year, we do have $87.4 million in funding remaining. However, we will have a new funding allocation for the next financial year. We often talk to our customers and get feedback and evaluation so that we can continually improve our products and understand how our products are supporting them directly on their farm. Really interesting. I won't go through all of these stats, but in our last survey, which was held last year, we had more than 500 existing RIC customers participate in the survey, which was fantastic. And what was so pleasing to see was that over 50%, so over half, actually agreed that their RIC loan enabled their farm to keep operating. So this is delivering back to Australian farmers and building the agriculture community and helping to sustain the industry on behalf of Australians. So just a little bit of a background about RIC and how we work with your bank. We actually work alongside your commercial lender. We aren't actually a bank ourselves, but we operate with similar processes. We do conduct credit assessments for all applications. RIC loans are actually designed to work alongside your bank loan, and RIC customers maintain their bank relationship throughout their loan term. We do share a commercial risk with your banks, and we also work together to strengthen the Australian agriculture sector. So with all of that in mind, I might just pause there and we'll hand over to Mitch, who will talk through the AgriStarter Loan in a lot more detail, including the eligibility criteria, the loan purposes, and how you can apply as well. Thank you.
Thanks, Mel, and thank you all for joining. Really exciting product, the AgriStarter. Essentially, I view it as it's getting good people into their first farm, firstly, or keeping good people on the farm via allowing them to have more control of the family business via succession. So the AgriStarter loan itself, there's actually two types of loan within the loan. The first one is the first farmer. So that is for specifically for people who are purchasing their first farm or have recently purchased their first farm. And when I say recent, the last about 2 or 3 years allows people to still qualify. And then secondly, which can be quite a different event, that's the succession event. So taking over part or all of the family farm. Generally parents, could be uncle, could be grandparents. So they're the, I guess, the general purposes of the AgriStarter and how it's used. Very gratifying working for the RIC and seeing people take either one of those two steps and us being able to help. So how the loan is actually used, very broad, wide uses for the loan. Farm purchases, investing in the farm, and refinancing debt is probably the main ones used for the first farmer. Now, on our website, there's also, it mentions a few things that you can't use the AgriStarter loan for, and primarily off-farm or domestic uses. We don't want you taking out a loan to take an overseas holiday or putting it in a swimming pool or buy a new fridge, but so it's generally for farm purposes. Now, you might have already bought a farm, your first farm, as I say, in the last little while, and you already have debt with a commercial bank, and you can use the AgriStarter to refinance part of that. Now, with the successor, the succession loan, similar uses to the first farmer, but typically there'll be you will have invested some money either in some land, or you might have bought part of mum and dad's business, and you might have already done that recently and obtained finance elsewhere. So we can use the AgriStarter loan to refinance some of that debt. So let's get into the features, how it works, how it's made up. So firstly, the maximum amount the loan can be with us is either $2 million or the remaining amount of commercial debt after we settle our loan. The term of the loan is 10 years, and the first 5 years are interest only, so no principal repayments are required. Then the second 5 years, you pay off 1/15 of the loan per annum, or 1/5 of the loan over the remaining 5-year period. So at the end of 10 years, you will have enjoyed 5 years interest only, and then you will have paid off 1/3 of the loan at expiry of the loan. So at the end of the loan, you'll have a balloon payment to make for us, and we would expect after 10 years you've been on the farm, your equity has improved, your track record has improved, and refinancing back to a commercial bank should not be a problem, or should be less of a problem than when you've initially started out with us. So the interest rate on the loan is currently 4.99%. That changes, gets reviewed every 6 months, and it's based off the 10-year government bond rate, and which works similar to the RBA cash rate. It's similar but different. But the intent is that we'll always be 2, 3, 4% underneath, materially underneath general commercial bank rates, so as to give a benefit. So the benefit is a cheaper interest rate and interest only for the first 5 years. There are no fees to establish the loan. There's no fees to make extra payments. There's no fees to pay out the loan. Unfortunately, you can't redraw the loan. So if you paid us back $100,000 ahead of time, you can't have that. You can't redraw that. So often we find our clients, if they do have spare cash, they'll pay off their bank debt or their commercial debt, which makes sense because often they can redraw, or they'll enjoy a greater interest saving by knocking off their higher interest rate debt. I mentioned there's no fees. There are some costs sometimes to establish the loan that we incur, and we do pass them on. And they're the costs of registering our security documents and or obtaining advice when we read your trust deeds, if you have trusts. So if it's a simple structure that you have, it might be just a straight partnership, and typically that's a couple $100 max. But if you've got 3 or 4 or 5 trusts, which some farm entities do, and a number of other complications, you might have a couple of leases on there with wind farm. That'll. But rarely do we see the costs over $1,000. Typically, 200 or 300. But they're the basic features. Please pepper us with questions at the end in the Q&A for any other detail. Now, eligibility is a pretty big one. We operate similar to a commercial bank, but we do have eligibility criteria that is unique to the RIC. So I'll just step through the main criteria. Firstly, and I've mentioned it a little bit, you need to have a commercial loan external to us, and it can be no less than what our loan is. Now, commercial debt typically is a commercial bank, but we do allow sometimes might be a loan from a vendor, or even a loan from mum and dad. Under those situations, we do want to see it set up on commercial terms. So a 0% interest rate with no mortgage and written on, the back of an envelope. We don't deem that as a commercial loan, but we do allow, and we have a number of our clients that their primary or even sole borrowing commercial debt is with a private party, as long as it's on commercial terms. We require at least one person within the borrowing group to obtain at least 50% of their income and put in at least 50% of their labour into the farm. We want someone to be making, and this removes hobby farms from eligibility, and that's the intent. We want actual real commercial operations to be funded by the RIC rather than a sideline type of business. Look, within that criteria of 50% income, 50% labour, there is a fair bit of scope to stay in your job whilst you purchase your farm. But as long as there's a plan to eventually one person to be on farm full time, that's the intent. You'll see there's a box that says in need of a loan. The eligibility criteria actually says in need of a concessional loan. Bit of an ambiguous term, but what it means is we don't want to be lending money, concessional money, to people who don't really need it. That is, they're in a very strong position. An example of that is a business that in a succession arrangement, or even a first farm purchase, where probably an extreme example is assets of $30 million and you have $2 million of debt. Well, that's a very strong position. You don't really need a RIC concessional loan won't make much difference there. But particularly for first farmers, we often see people basically scratch together a deposit, and they're sitting in a position where their equity is less than ideal. And that's where the RIC can come in and take a little bit of risk off the table of the commercial bank even. But still, we'll need sufficient security for the loan. It is a commercial loan, and it's federal government backed or funded, and the federal government eventually want the money back. So Mel mentioned we have a credit criteria, and we assess loans similarly to a commercial bank. And I'll go into the type of materials, the type of documents and information we require for a loan. But in short, it is very similar to what a commercial bank requires. So yes, sufficient security. So viable business, loan serviceability are related. You need to be able to show that you can service not only our interest, but all financial commitments, particularly with the bank. So in some cases, we'll factor in not only the interest, but some loan reduction or amortization on your loan. Particularly if you're on a very low equity, we would expect the commercial bank to be requiring repayments. And as mentioned, part of our loan after 5 years, we will be requiring it as well. The only other box there is interstate trade. And what that means is the business that you're in and the commodity that you produce, it needs to be you need to show that that's going to be traded, or at least the material part of your crop or produce will be traded either interstate or offshore overseas. Now, typically, the big industries, red meat, grains on broadacre cropping, dairy, they'll go off to an abattoir or a grain handler, grain trader, or a big dairy a processor, and we're satisfied with that. Even horticulture, they'll go to the capital city markets, and we know from there they could go interstate and offshore. And the reason for that, it's just part of our legislation and by which we operate under. That's a requirement. So just moving on, just I guess some examples of the sort of top the top missed criteria, eligibility criteria that we unfortunately have to say to people that they aren't eligible, and that's we often get people buying their first farm and they're still going to be in their full-time job, and there just isn't enough income on the farm to meet that 50% income on farm. And the same goes with 50% time on the farm. Yeah, we often get people with full-time jobs, and they're we know that they'll take a fair bit of time out of their week that there won't be enough to put in on the farm. Look, sometimes the business case presented to us shows a clear pathway to being on farm more than 50% and receiving more than 50% of income on farm, and we'll often accept that. It's really, we recognise how tough it is to get in on your first farm, so we do our best to enable that, and as I mentioned, often that is via a period before a period working off farm. Unfortunately, sometimes people just don't have enough security to tip into the to make available to the RIC. And how much is sufficient income security? Generally, we work similar to a bank. That is, we'll lend up to 70% of the value of a normal farm. In the case of an AgriStarter, where there's material off-farm income, particularly from one of the members, we might extend that beyond that, again with the intent of getting you onto your first farm. Unable to show long-term viability. Sometimes, and often that comes in similar to you just can't service your borrowing. Ineligible industry type. The primary ineligible industry types are those that the primary activity is processing or value adding to agricultural produce. The purpose of the RIC is to fund primary production, not value add down the track. And a reasonable example of that is wineries. Some wineries we can't fund because the majority of the grapes are grown outside of the business, and they are primarily a processor of grapes. So that's an example. Again, our website and guidelines show some others. But you'll actually be surprised if you have a look at the breadth of industries that are eligible. Certainly some far-flung horticultural ones that I've never heard of. So again, that's just showing the intent of the RIC and the federal government to get people onto farms, and we recognise that there are many industries within the one industry of agriculture. And then finally, not enough experience. Now, sometimes I'll use an example of if you have you're setting up a very niche farm, we won't necessarily require you to have the exact experience in that, and we might then look to your general business and industry experience. But generally, the intent of that is we don't want to be funding people into their first farm enterprise when they don't know what they're doing. They haven't got the experience. So I'll just talk about the application process, what it takes to apply for and hopefully have approved and eventually get a loan settled. The application process is all online. So you go to our website and it's pretty easy to follow your nose. You'll, at any stage, either before starting the loan application, you can give us a call on our 1-800 number. You'll go to our contact centre staff that are based in Orange. Lovely people, full of knowledge, full of help, and they'll be able to answer most of your questions. If they can't, it often comes to me and one of my colleagues. And we love talking to you about your situation. The last thing we want is for you to go through the process of applying for a loan, only for us to turn around and say it's ineligible. So yeah, speak to us beforehand, but it's all online, step-by-step process. There are a number of documents that you'll need to submit with the application. And those documents are financial statements, bank statements, future cash flow, and ID. Nothing more than what a bank would ask if you are starting with a bank. Then we go through the assessment, and part of the assessment process is actually getting on the phone to you and talking through and helping us understand your business. Particularly for, as I mentioned, some of those far-flung horticultural businesses. Yeah, you need to teach us. But for the main things, beef, grains, dairy. We've dealt with those. We deal with those all day, every day. Then we give you a loan decision, so whether it's approved or not. Hopefully, it's approved, and our approval rate is circa 75%. So, and then we have an internal KPI or goal to have the loan approved within 30 days of it being submitted. Now, what can slow that down sometimes is we'll have to and fro a little bit with the information. We'll accept an application and start working on it, even though all the info may not have been initially provided at the application. But yeah, eventually we'll have to get it. We'll have to work with the bank, and I'll talk a little bit about how that works, but sometimes we are sitting on our hands waiting for the bank to come back to us, either with information or documentation to enable us to take security over your property. But once it's approved, the docs will go out in the mail, you'll sign them, return them, and eventually we'll settle the loan. Now, often that settlement will be a property settlement. We'll attend settlement when you do purchase a property. It might also be refinancing debt with the bank. So that's just merely us transferring funds to the bank. But there can be other it could be plant and equipment. So often it can be a staged settlement. That is money to the bank, but you might be buying some equipment, and we'll often direct those funds direct to the provider. In some cases, though, there'll be an element of working capital, 50 grand, 100 grand or so, and we'll just shoot that straight to your account. But ordinarily, yeah, it's a normal settlement. As I mentioned, there's application support all the way through once you submit the application, you'll be talking to one person, an agribusiness lending specialist. I run a team of those, and again, knowledgeable people that will basically hold your hand through the process. But also, as I mentioned beforehand, our 1-800 number to the contact centre, you'll get support that way as well. Now, working with your bank, as I mentioned, most of the commercial debt is via a commercial bank. We need you to speak to your bank before you apply. Ideally, we'd like an approval or a loan already in place. But look, in many situations, we're happy to work concurrently with your commercial bank's loan application. But yeah, if you haven't started talking to a bank when you apply with us, we'll immediately say, look, too early, get the ball rolling with those guys first, because we'll need their approval, and often we share security. When I say we share security, a very typical structure is, particularly for the AgriStarter, is the first farmer AgriStarter that is a first farm to be bought or has been bought. The bank may already have security, that is a mortgage on the property. We'll take a second mortgage, and we're happy to do that. And the advantage of that for you and the bank is the bank's more likely to extend further terms. But nevertheless, there's a we'll go second mortgage, and there's a document called a deed of priority that maps out the arrangement between the bank and the RIC. And it's basically, the arrangement is basically, if the security needs to be realised, they get the first bite of the cherry, and we get second. But that needs to be negotiated with the bank. We deal with, we have dealt with and do deal with pretty much all the banks, the big four: Rabo, BOQ, Suncorp, more recently Judo coming in on the scene, and rarely do we have a problem. So yeah, at least be a reasonable path, way down the path of talking to your bank. The application form, as I mentioned, it's a pretty simple step-by-step process. There is a checklist, and there are templates. We ask for a cash flow forecast. You often have your own cash flow forecast, but we'll have a template there as well. We'll ask for a list of assets and liabilities. You may have your own. Often they come via written on, commercial bank format, perfectly fine by us. But also use your trusted advisor when filling out the application, such as your accountant, working with your bank manager, or a rural financial counsellor. Or it could be a friend, old mate over the back paddock, who might help you. We won't hand out Lachlan's phone number, who's our client speaking later. That might be a bit cruel on him. But yeah, you might know someone who's already got a RIC loan. So guess in summary, what we're looking for in the application is we'll need equity and security, well, security primarily. Equity is related, and why we like to see someone with a bit of equity is equity allows you a buffer should you sort of fall on tough times. But there needs to be sufficient security for us. As I say, 70% LVR. I think that's the first acronym I might have used. Us finance people love acronyms. But that's our preferred, but look for an AgriStarter. Sometimes we go above in certain circumstances. Need to show us that you can meet all your commitments. That's what we mean by serviceability. Yeah, show us you are keen and enthusiastic. Yeah, don't be backward in coming forward. We love, and often that is via the plan, but when you're talking to us as well. Look, occasionally we get applications that are being sent to us via the accountant, and eventually we'll ring the applicant, the actual applicant, and they'll act pretty vague and say, well, the accountant's handling all this, I don't know much. At least know what's going on in that regard. Yeah, sort of puts us a little bit on the back foot. But that's what we mean by enthusiasm. We want to see that you're committed. If you're committed, there's every likelihood we'll be committed. And again, relationship with your commercial lender. Make sure that's teed up. So I'll now cross back to Mel, and you can introduce Lachlan to us.
Yeah, fantastic. Thanks, Mitch. That was lots of really valuable information there and lots of details. So I'm sure our audience has got a lot from that. We do have a few questions that are popping up now, which is fantastic. And we might just hold those over until after we hear from Lachlan, our customer story. So if you wouldn't mind hanging around, Mitch, till afterwards. So welcome, Lachlan. Thank you for joining us. We're pleased to welcome you. You're one of our valued customers here at RIC. You're from Cadell, New South Wales, and I believe you and your wife, Jacqueline, used an AgriStarter loan to make your succession planning easier to get onto the farm when you were starting up your own sheep and cattle farm and improving the business. So thank you for coming along and sharing your story. Can you just tell us how you found out about a RIC loan and what you've been able to use it for?
So thanks, Mel. Found out about a RIC loan when they first started up in Orange. I suppose we're based at Cadell, so half an hour from Orange. I remember they did open an office here for RIC, and it was of interest. I had some friends working here at the time, and they kind of were telling me a bit what they were doing. I was like, oh yeah, that's kind of interesting. And I was like, maybe one day we'll be able to get there. And then RIC came out with the AgriStarter loan, and that kind of pricked our ears as well. I'm like, oh, yeah, maybe one day we'll apply for that. And it got to the point where my wife and I were married. We're looking at kind of setting up by ourselves and doing something a bit different to what our families do. And so we bought a block of land at Cadell with basically approached a bank and got a commercial loan there. And it was quite, I suppose we did start out in different times to now. Basically, it was a low interest kind of environment then. And now interest rates went up. We're like, there's an AgriStarter loan. Maybe we should apply for that. And so basically we, went and talked to our bank. I was a little bit nervous about talking to our bank about it because the bankers, they control you when you have debt. Banks, but that's the feeling. But the bank was actually very positive about it. So that's probably one thing I'd say to people, to say, look, banks kind of probably see it as reducing their risk, even though I'm not sure if they get commissions or how it works for them. But basically that was taking business away from them. But no, they saw it as reducing risk because we were kind of starting out and we had lower equity. And then basically the bank saw us as the RIC taking over part of it. That was meeting some capital repayments they wanted from us into the future. So they were happy with that. And then basically went through, and probably happened about the same time we were doing like a farm resilience program. We applied for that and we're part of a group doing that. And so we did our business plan and our cash flow forecasts And then basically we had that all there, and we just had to basically go through the RIC application process and put it in.
Yeah, fantastic. Well, it sounds like it was an interesting journey for you, and you having that relationship with your commercial lender actually may have supported you as well through the process. So Lachlan, you've actually been farming for quite some time. You're an experienced farmer, and then
Yep.
wanted to move into farming yourself. Can you just tell us a little bit about your experience in farming and what led you to wanting to do this?
So I grew up on a family farm near Canowindra. And so I suppose we have a white Suffolk and Poll Dorset sheep stud there. And I suppose my father passed away in 2009 when I was in my teenage years. And basically I took on managing the farm from then onwards with the help of my mother and my sisters. And basically that's kind of the experience. So I've been running that till now. And then basically the last couple of years, we've started kind of doing some succession planning. And I've taken over running the start, and one of my sisters has taken over running some commercial animals. And so basically we still adjust some animals on my mother's place at Canowindra, but basically where Jackie and I have our own separate block now, which we can invest, I suppose, in ourselves and get some capital behind us.
Yes. Well, it sounds like you've had a challenging time throughout your experience of farming. Farming obviously isn't easy and isn't for everyone. But if you can just maybe fast forward to now and just sort of tell us how your RIC loan actually helped you through that journey, especially from that startup piece, which is always quite challenging for many farmers
Yeah,
getting into
so
it.
I suppose interest rates, well, I suppose last year when we applied, basically they were going up and up and up. And then we're like, oh, let's get this loan in, let's get this loan in. And basically we could just see that our interest repayments and more interest, and we had some capital payments coming up, basically were fighting away at what we could actually do on the farm, what we could do to improve the farm. So now we've got the RIC loan, we've got that little bit of savings in terms of interest, which we're now reinvesting back into the farm. So recently the farm we bought was basically had no infrastructure on it. It had a set of cattle yards and it was three paddocks. So we've just completed the water infrastructure works. So we've installed a kind of a reticulated water system with 15 troughs. And now we're in the process of basically dividing the paddocks up into more. So last weekend and hopefully this weekend, basically we'll have one of the paddocks divided up into 6 paddocks. So we just kind of work our way through the farm, and then after the paddocks are done, then hopefully we can have some money left over in the bank to do some pasture improvement and get the farm really ticking.
Sounds like you've got quite a decent sort of financial plan and business plan behind you, and you've got sort of milestones and goals that you're ticking off throughout this journey.
Yeah, I think at the moment with, I suppose, lower commodity prices and higher interest rates, we've just realised that we need to get everything humming and basically make sure we've got as much turnover as we can to kind of get the money in the bank to meet the business expenses and repayments now. And that's what we're aiming to do, try and maximise everything straight away, which is, I suppose, having that lower interest cost has actually allowed us to reinvest to kind of keep things moving forward.
Yeah, fantastic. Okay, and so what's next for you and your family?
Well, fencing. That's more fencing, but well, we are about to go through, like we've done the first phase of succession within my mother's side of family. So basically, we are looking at maybe taking on more land there eventually, but we've still got to work out that process. But yeah, we just want to keep growing. We've got my wife's really likes Poll Hereford cattle, so we want to keep growing that side of things, because anyone who's in the sheep business at the moment will realise that you don't want to probably put all your eggs in one basket now. It's all a bit up and down. So if we decided basically diversify our risk is to have probably some more cattle and sheep as well. So we're just kind of, more risk adverse.
Yeah. Well, that sounds very smart, and congratulations on your journey. It sounds like you're going leaps and bounds. Is there anything you'd like to say to others that are listening today who might be starting their farming journey? Is there any words of wisdom or tips you can provide them, especially around the RIC process as well, I suppose, in terms of thinking about concessional lending and how that may help?
Probably, I'd say to anyone starting out, like any infrastructure is better than no infrastructure. That's because it all costs a lot of money to kind of put in these days. So if you're looking at buying a farm, anything that's got kind of even just like a dilapidated shed or a hay shed, it's still good. You can still make that work. And probably applying for the RIC loan, I was quite impressed with the kind of the person who's doing the assessment of our loan. He had heaps of experience in agri lending, and it was actually just great. He just used to ring me up at all different times of the day, basically just asking questions about the applications and just to get a bit more clarification. I really felt that he was invested in our business to get this loan through, and that was, it was good.
Yeah, excellent. Well, thank you for sharing your story and thank you for that valuable feedback. We'll pass that on to our team. I'm sure they'll appreciate that because our team do like to go above and beyond to help farmers and understand the farmers' needs to work through, the assessment of loans. So we might just ask you to stay on the line, Lachlan, if you can. We might just go into a bit of a Q&A session. I realise we've got about 10, 15 minutes here and we've had a few through already. So if you haven't noticed just yet, they're in the toolbox right at the top. There's a Q&A little icon. So if you'd like to ask any questions, just pop them in there. If we don't get a chance to answer any of your questions, just wanted to refer you through to our info@ric.gov.au help desk. That goes through to our contact centre and they'll be in touch with you and we'll be able to answer any individual questions you might have if we don't get to them today. But a couple that before we go into questions, we've just popped up a little poll for you as well. It's just 4 quick questions just to rate the delivery today. So we'd appreciate your feedback if you get a chance to do that while we're answering some of your questions. So the first one that came through from Beck was for Mitch actually, can you pay principal as you go in the first 5 years or is it just paying interest only?
Yeah, at any stage you can pay off all or some of your loan. That is the long and short of it. But as I say, the one limitation is we don't have redraw facility, so you can't pay off 100,000 then get 100,000 back again.
Okay, yeah, excellent. I've got one here from Clem, and this one is, sorry, my technology. Are we able to work through a scenario with an advisor before applying, given that it's not a straightforward scenario? So before you put an application in, are we encouraging people to call us and have a chat about their individual circumstances?
Yeah, most certainly. And again, the 1-800 number on the screen, that'll take you through to the contact centre in the Orange office. Again, lovely and knowledgeable people. Anything they can't answer, they'll then ask someone like myself to get on the line. But yeah, it's a common thing to actually workshop a proposal before the application stage. So we do strongly encourage it. Again, just so you don't go through the process of applying and just realise a relatively simple eligibility criteria has been missed.
Mm-hmm. Good answer. So just make use of the number as Mitch said, or even our email as well for those individual circumstance questions. And so we've got a question from Joe. I think this is another one from you, Mitch. Is assuming that a deed of priority would be required, ranking the mortgages. Can you set a number in this priority in case you had working capital increases?
Yeah. So that's a part of the negotiation between, well, it's a 3-way negotiation between us, the bank, and the client. So the deed of priority, I think I might have mentioned it in my part. It's just a document that sets out the arrangement, and the arrangement is, and typically, sorry, the arrangement is who gets first go at the sale proceeds in the case of a sale of a property, and the amount, and most of the time that's the commercial bank, and then we get ours as second, and often the bank goes third in most cases. So Anything we don't need, then they can go third. So the amount that the bank has first priority is generally all their lending limits. So that's their core debt plus the overdraft, regardless of what the overdraft balance is at the time. Then we're happy for the bank to have an additional buffer on top of that. And each bank and banker can set a different amount there. If it's too high, we have to include it in our serviceability, and we sometimes go back to the bank and say, look, that 30% on your total debt, it just doesn't make the serviceability work. But typically it's 10 to 20% of the total debt of the bank. So if the total debts of the bank are $1 million, the deed of priority will state might be 1.1 mil, 1.2. Then our debt, then everything after us is with the commercial bank. The only exception there is sometimes there might be other lending to a state-based concessional lender, such as Q-Rider or RA, Rural Assistance Authority. They generally go first on everything, particularly in the case of rural assistance. But yeah, that's how the deed of priority works.
Mm-hmm. Okay, thank you. Another question from Steph around farm contracting income. Is this categorised as off-farm time and income when you're doing the assessment?
Generally, yes. But just drawing from experience, generally it's the farmer is the farmer first, and then they might have a bunch of machinery and that they'll use for off-farm contracting. There are some cases where, yeah, it is the main operation of the family farm entity. I have seen in some situations where the applicant, it might be a couple, and one member of the couple is deemed the full-time farmer, or the greater than 50% of their labour is on farm, whilst the other partner, most of their labour is off-farm doing contracting. Contracting it's often a very important income source. So yeah, don't be afraid if you do a fair amount of contracting to still apply, as long as your farm business, the business entity itself, you're not running 10 head of cattle on 50 acres. As long as it's of a material size that's going to be supporting at least one person.
Mm-hmm. Yeah. Good information there. Lachlan, I might just bring you in. You told us earlier that you really valued the sort of 5 years interest only payments for the loan.
Yep.
How did that actually help you?
So that's good. So we do have, basically, well, I suppose more breathing room to get set up. So if we're growing our sheep numbers, well, we are growing our sheep numbers. So we're basically not having to sell all our females. To make interest repayments, we can keep some females back to keep growing. And that's probably, and then also, as I said before, investing in infrastructure. So fencing and water and hopefully some pastures in time. Yeah.
Yeah.
That's
So
where.
Sorry, keep going.
So no, that's basically the real benefits of the 5 years interest only, and it just helps you get set up. Really, you're not having to worry about paying capital back. Well,
yeah. Well, that sounds good. Yeah. So just more money in your back pocket, really. The cash flow side of things helps with that.
That's right. Yeah, and it gives you that kind of, I suppose, breathing room to have a plan to be able to start paying capital in 5 years. Because if you just hit the loan, you have to pay capital back straight away, and you're only just starting up, it's quite hard.
Yeah, okay. Yeah, I can see how that could be a key benefit for you and other first farmers in that regard. And so, Mitch, I might ask you about leasing a farm. Could that be like a stepping stone in this process to owning your own farm? And could you use that to apply for a loan here?
Yeah, look, leasing sort of works two ways. That is, your first farming enterprise might be one operated on leased property, and you come to us for funds for machinery, livestock, working capital to establish that business. That is certainly an eligible and permittable borrowing clause. The only limitation to that you might have is we still will require security, and we're happy to take residential or commercial property, happy to take water licenses, occasionally machinery and plant and equipment, but that's what we find sometimes the limitation to someone leasing a property. But then again, in the other circumstance is where someone is leasing a property, so they're not a first farmer per se because might have been doing it for 5 or 10 years. Then they want to buy their first property. Well, that is permissible. We're very happy to fund people onto their first actual block that they own themselves, a material block themselves. There is a third that is not permissible, and that's where someone buys a block of land and leases it to a third party. In that case, they're a passive investor, I guess, into the farm. So yeah, our loan isn't for that purpose. We'll allow a little bit of adjustment, or you haven't got you bought the farm and you haven't got enough capital left over to fully stock it. Again, a pathway to eventually fully stocking it yourself. You might lease half of it on a short-term basis, and we can see that that's a plan or a means to an end.
Mm-hmm. Yeah, good to know. Now, I think we've probably got time for one last question. There was a question that came through earlier prior to we started, and it was more talking through the difference between some of our loans. So the AgriStarter loan versus the drought loan was the key question in terms of the purpose of each and the eligibility criteria. If you wouldn't mind briefly chatting through that, Mitch.
Yeah, so the farm investment loan and the drought loan, they are kind of a little bit similar. So you can group them together. And then there's the AgriStarter. Essentially, the drought loan and the farm investment loan are for existing established businesses that have had a significant negative event. It might be drought, it might be collapse of a market, floods, etc. So it's for existing farms, whereas the AgriStarter is for new entrants into the farming game. So the Lachlan, for example, he's only owned his place for a short period of time, so he hasn't had enough time to have that severe financial impact. That needs to be demonstrated that the impact will last at least 2 years. So, in fact, I had an application very recently from someone who applied for a farm investment loan, and they couldn't demonstrate that there was a negative event. And I said, "How long have you owned the property for?" And they said, "Oh, well, actually, we've been working it for 10 years, but we've only owned it for 1. We were leasing it for 9 years." So I said, "Oh, actually, you don't qualify for a farm investment loan, but you do qualify for an AgriStarter because you've only just taken on this property." So sometimes someone will apply for a loan, and we'll redirect it. We'll just change the top of the application form essentially, and turn it into the application is for another loan type that better fits. Mm-hmm. But yeah, to answer the question, it's farm investment and drought loans are for those who are already farmers and have been farmers for a reasonable period of time.
Yeah, Excellent. Thank you very much. Well, that sort of brings us to the end of our webinar. We do RIC webinars on various products each quarter. So coming up next will be our farm investment loan. But we thank you all for joining us today. Thanks so much for your time, Lachlan, and for coming in. It's been wonderful to hear your story and going from strength to strength by the sounds of things, which is fantastic and exactly what we our loans to help farmers to do. So congratulations and thanks again. And thanks, Mitch, for your time today. If anyone has any further questions, please feel free to reach out to our team. We're more than happy to help. And yeah, just get in touch with either calling our contact centre or dropping us a quick email and we can help. And just a reminder, we do have a quick quiz online as well through our website, which actually is in less than a minute. You can find out key eligibility criteria for each of our loans and find out if a RIC loan is right for you. And if you're still a little bit unsure, please just feel free to give us a call and we can talk through your individual circumstance. So anyway, thank you very much, everyone, for joining us. The recording will be available later today and we'll email that through to all of our participants. Thank you.